Hey everyone, and welcome back to all you incredible moneymakers out there. Let's dive straight into the XRP action because there's a ton brewing right now that could change everything for us holders. Picture this. It's the week before Christmas 2025. The markets are quieter than a holiday dinner after everyone's stuffed, and XRP is sitting around 190, down just a bit today, while Bitcoin hovers near $88,000, and Ethereum stays under that key $3,000 mark. The whole crypto space feels sleepy heading into the holidays. Traders are logging off, families are gathering, and volume is thinning out big time. But here's the exciting part. Low volatility like this often sets the stage for massive swings. Algorithms don't take vacations, and any surprise news could ignite fireworks. We've got delayed GDP numbers dropping soon and initial jobless claims midweek. Those could shake things up. Or imagine some geopolitical headline or a tweet from a world leader sparking buying frenzy. In thin markets, a little catalyst goes a long way, potentially sending prices soaring before a quick pullback or vice versa. Stay sharp because opportunities hide in these quiet periods. One huge development that's flying under the radar but could be game-changing. Bipartisan lawmakers in the U.S. House just drafted the digital asset PAR, proposing to exempt stablecoin transactions under $200 from capital gains taxes starting next year. This targets regulated dollar-pegged stablecoins, making everyday payments feel like using cash without the tax headache. It's smart policy. Stablecoin issuers often hold U.S. treasuries, boosting government funding while encouraging real-world adoption. Critics worry about loopholes like splitting big transfers, but gas fees on most chains make that impractical. If this passes, it supercharges stablecoin utility, drawing in mainstream users and indirectly lifting assets like XRP that power cross-border flows. Speaking of adoption boosters, XRP spot ETFs have been live for weeks now, and the liquidity story is heating up. In a recent interview clip that's making rounds, Bitwise's Matt Hogan explained how rising ETF volumes directly improve underlying XRP liquidity. More trading begets more trading. He pointed out a key misconception. ETF buyers don't stop there. Many graduate to holding actual XRP in wallets, expanding the ecosystem. Think about it. Trillions locked in retirement accounts like 401ks and IRA can't easily go on chain due to penalties. But ETFs open the door for that capital without restrictions. We've seen this playbook with Bitcoin and Ethereum ETFs. Initial dips, then massive rallies. Ethereum plunged to around $1,400 post-ETF launch before exploding 260% in months. XRP's timing was tough, launching into a broader market pullback. But every major crypto ETF from Bitcoin to Litecoin is feeling similar pressure right now. It's not an XRP-specific failure. It's cycle dynamics. The silver lining, inflows are building quietly. Setting up for that liquidity begets liquidity, Flywheel Hogan described. And if you're serious about positioning yourself ahead of this potential explosion, gaining exclusive insights into XRP's institutional moves, join the XRP Insiders Elite today. This premium group gives you the unfair edge serious holders need. Strategies designed to maximize gains in any market. It's the smartest move you'll make this year. Details in the video description. Shifting gears to the bigger picture, altcoins like XRP have been lagging Bitcoin hard, but technicals scream oversold opportunity. Popular analyst Ash Crypto highlighted how alts versus Bitcoin are at historic lows after a 4-year downtrend, the most oversold ever with RSI dipping negative. We've seen 2 fake-out pumps in recent years, but now MassED is flirting with a green crossover for the first time in 43 months, mirroring the setup before 2021's epic alt season. Add in expected rate cuts, low inflation, and the Fed shifting to QE in 2026. History shows alts crush Bitcoin once liquidity floods back. Ash is calling for a mega breakout that could end years of pain and kick off insane gains in Q1 or Q2 next year. Of course, not everyone's all opium. There's real debate stirring food lately from FundStat leaks. Screenshots from their private research surfaced showing head of digital assets, Shah Farrell, prepping for a tough first half 2026, Bitcoin potentially dipping to 65K, Ethereum to $1,800, $2,000, Solana 75% off highs. He cited risks like possible government shutdowns, tariff uncertainties, bond volatility, and clustered ETF cost bases around current levels inviting tax loss selling. Farrell even de-risked half their crypto portfolio to cash for protection. But FundStrat isn't one voice. Tom Lee, the macro bull and BitMine chairman, pushes back hard. He's accelerating Bitcoin buys, believing the classic 4-year cycle is evolving with ETFs, corporate treasuries, and sovereign adoption overriding short-term noise. Lee sees structural lows likely in with new highs possible early 2026 despite chop. Technical analyst Mark Newton adds nuance. October damage needs repair, but a bounce into February could set up late-tier rallies once trends heal. This contradiction drama highlights why real research thrives on diverse views. Short-term defense versus long-term conviction, coexisting. Funds can't YOLO everything. They manage risk across horizons. It reminds us to prepare for volatility while staying bullish on the multi-year thesis. Choppy early 2026 possible, but the fundamentals, ETFs maturing, regulatory clarity, payment utility point higher over time. That's exactly why these quiet holiday periods can be deceptive. Big players are accumulating while retail sits on the sidelines, and the data backs it up big time with XRP ETFs. Recent numbers show spot XRP ETFs have racked up over $1.1 billion in cumulative net inflows since launch, with consistent positive days stretching into weeks even as broader crypto faces outflows. That's not noise. That's disciplined institutional buying locking up hundreds of millions of XRP tokens off exchanges. Exchange supply has dropped sharply as a result, creating a tighter float that could amplify moves once momentum flips. We've seen this before. Early ETF phases often look flat or disappointing on the price chart, but the underlying demand builds a foundation for explosive catch-up rallies. On the policy front, a fresh bipartisan draft bill circulating in the House, the Digital Asset Parity Act, could remove major friction for stablecoin adoption. It proposes exempting capital gains taxes on regulated stablecoin transactions under $200, treating them more like cash for everyday use. Stablecoin issuers typically hold massive U.S. treasuries, so this aligns with government interests while encouraging real-world payments. If it gains traction into 2026, expect a surge in on-chain activity that benefits efficient networks like the XRP ledger for cross-border settlements. Small steps like this often snowball into broader utility-driven demand. Diving deeper into the altcoin landscape, the frustration is real. Many feel like we're stuck in an endless Bitcoin dominance phase, but look at the charts. The alt-BTC pair is at historic oversold levels not seen since previous cycle bottoms. RSI readings are flashing extremes that preceded massive alt outperformance in past runs. Analysts like Ash Crypto are pointing to converging signals. XD crossovers after years of dormancy, combined with expected Fed easing and liquidity injections in 2026. History rhymes. Alts tend to lag Bitcoin's initial pump, then explode once fresh capital rotates in search of higher beta. On the cautionary side, the fund strat debate highlights why nuance matters in this market. Leaked notes from their digital assets. Headshaw Farrell outlined defensive positioning, de-risking portfolios ahead of potential early 2026 headwinds like policy shifts, bond volatility, or clustered selling around ETF cost bases. He's prepping for drawdowns, Bitcoin possibly testing 66.5K, Ethereum 1,800, 2,000 as a base case for the first half of the year. But Tom Lee, the macro voice and Bitmine chairman, counters with structural bullishness. The 4-year cycle is evolving thanks to ETFs, corporate buys, and sovereign interest. His accelerating treasury additions, convinced lows are in, and new highs await despite short-term chop. This isn't contradiction. It's real-world research. Different team members handle different mandates, short-term risk protection versus big-picture cycle conviction. Funds manage billions. They can't chase every narrative. It mirrors what smart traders do. Stay long-term oriented while respecting volatility. Early 2026 could indeed feel unstable with possible government transitions or tariff talks adding noise, but those dips have historically been the best entry points for the eventual leg up. Zooming out, XRP specifically sits in an interesting spot. Despite the year-end pullback to around 188 to 190, on-chain milestones and ETF volumes tell a different story than the spot price. Whale activity remains elevated, and reduced exchange balances suggest absorption rather than distribution. Add in Ripple's expanding partnerships and the broader push for faster global payments, and the setup feels coiled. We've anticipated this consolidation phase post-ETF launches, similar to how Bitcoin and Ethereum traded sideways or down initially before inflows compounded into rallies. The key takeaway heading into year-end, thin liquidity amplifies everything. Upcoming data like GDP revisions or jobless claims could spark short-term swings, but the bigger trends favor patience. Oversold technicals, building institutional footprints, and improving regulatory tailwinds all point to 2026 as a potential inflection year for ALTS, including XRP. Markets reward those who zoom out during the noise. This is not financial advice. Looking ahead into the final stretch of 2025, the crypto market remains in this holding pattern with thin holiday trading amplifying every move. As of today, December 23rd, XRP is trading right around 188 to 190, down slightly on low volume, while Bitcoin sits near $88,000 and Ethereum hovers just under $3,000. It's classic year-end behavior. Many traders are stepping away. Funds are closing books and liquidity is drying up, which means any headline or data release can cause outsized swings. But beneath the sleepy price action, the institutional story for XRP keeps getting stronger. Spot XRP ETFs have now surpassed $1 billion in cumulative net inflows since their November launches, with some reports showing up to $1.2 billion in assets under management and over 700 million XRP tokens locked away in custody. Remarkably, these funds have seen positive inflows every single trading day. No outflows at all, setting them apart from Bitcoin and Ethereum ETFs that have faced periodic selling pressure this quarter. Exchange supplies continue to drop as institutions absorb tokens, tightening the available float and building a base for potential upside when fresh capital rotates back in. On the regulatory side, the newly proposed Digital Asset Parity Act is gaining attention as a practical step forward. This bipartisan draft would exempt capital gains taxes on regulated stablecoin transactions under $200, treating them more like everyday cash spending. To qualify, stablecoins need to be dollar-pegged, issued under existing frameworks, and maintain tight stability. If this moves forward into 2026, it removes a big friction point for real-world payments, encouraging broader adoption of efficient blockchains like the XRP ledger for settlements. Combined with Ripple's expanding network, now over 300 institutions and features like native lending rolling out, the utility case is strengthening even as spot prices consolidate. The broader altcoin thesis still holds water too. Despite the frustration of lagging Bitcoin metrics show alts at extreme oversold levels against BTC not seen in years, upcoming liquidity shifts, potential rate cuts, and maturing ETF ecosystems could spark that rotation we've been waiting for. Analysts remain split on timing. Some like Ash Crypto eye a strong Q1, Q2 2026 breakout, while others flag early chop from macro risks. Inside Fundstrat, the nuance continues to play out publicly. Tom Lee stays convicted on the multi-year cycle, accelerating Bitcoin and Ethereum buys through Bytean and calling for new highs possibly as soon as early 2026. He's framing the 4-year pattern as evolving with institutional forces overriding short-term noise. Meanwhile, their digital assets head Shan Farrell is managing near-term risks, de-risking portfolios ahead of possible headwinds like policy transitions or clustered selling. His base case includes Bitcoin testing 6265K in the first half. It's not contradiction. It's layered thinking, defensive tactically while offensive strategically. Real funds operate this way, balancing horizons to protect capital without missing the bigger upside. Ripple-specific developments add more layers. Recent partnerships and on-chain upgrades, including native lending protocols, position XRP as more than a bridge asset. It's evolving into institutional-grade collateral. Whale holdings and reduced exchange balances suggest quiet accumulation rather than distribution. Even wilder long-term calls, like potential $1,000 paths over a decade under massive adoption scenarios, keep the conversation alive, though grounded minds focus on nearer-term catalysts like ETF maturation and payment volume growth. As we head into Christmas and year-end, expect continued range-bound action with support near current levels and resistance overhead. Economic prints this week might nudge things, but real momentum often waits for January inflows and fresh narratives. XRP at these prices, backed by consistent ETF demand, regulatory tailwinds, and improving fundamentals, looks like a setup rewarding patience. The pieces are aligning quietly. 2026 could deliver the catch-up we've anticipated. If you're ready to get the absolute edge on XRP's next moves, exclusive institutional flow tracking, on-chain whale signals, ETF analysis, and my proven trade strategies that crush market noise, join the XRP Insiders Elite now. This is the premium community where serious holders access daily insights, alerts, and setups built to maximize gains through volatility. Limited spots available. It's the one move that could transform your portfolio.